I want to talk today about, because everybody here has some form of insurance or you're breaking the law, because unless you walked here, took the bus, you drove. So I want to talk about what everybody's going to face at some point in time in their lives as a driver, homeowner, business owner, as a claim. We'll talk about the claim. So here's some questions I want to just throw out. These are rhetorical, so please don't answer them. That's what rhetorical means. For those of you who don't know, I know. R-H-E-T-O-R-I-C-A-L. Quinn.
Spell check.
Yeah, okay. That's good. Claims. When should I file them?
Immediately.
I should file anything, anytime, for any amount, correct?
No.
Do claims impact you the same depending on the line of business, home, auto, or business? And that's why we have insurance, right? Okay, I want to throw just, we're going to talk about the home first because that's usually the biggest area of impact, because regardless of the claim, and this asterisk is act of God. So, and that's loosely defined depending on the carrier, the company, and the policy you have. But in general, any claim you file with your home, regardless of how it happened, who did it to you, whatever Barbie was flushed down the toilet, you will be charged for that claim, regardless of the amount. The exception is, anything generally over $1,000, you will be charged for. So, for example, I was quoting friends of mine. They had a $1,600 claim. I looked at them and said, what idiot agent said go ahead and file that claim? Because they pay 30% on that claim over the span of 3 years. Not only that, because of today, with all the crazy billion-plus dollar claims that have been happening all over the country, all over the world, that insurance companies have their hands in, it's impacting each one of us in this room here in Orange County, California. Yes, the Indonesia, tsunami, etc., does impact us here locally, because insurance carriers are no longer just insuring Orange County; they're insuring the world, and it all falls down to each one of us and the rates we pay and how they underwrite, because it's all about profitability. And when they're unprofitable, they got to get profitable. If they can't make it on earnings, if they can't make it on keeping the losses low, guess what? The third thing is premiums. You got it. So the point is, when someone calls me and says, hey, something happened in my house, what should I do? I usually ask them, well, what happened? How much is it? And what can you personally do to impact fixing it yourself? And they kind of go, whoa, isn't that what I have insurance for? It's like, sure, you can file a claim. I'm not going to tell you not to. It's illegal for me to do so. But if you can impact that and just take care of it yourself, and I'm not saying a $10,000 claim, I'm not implying that. But if you have a $1,000 deductible and a $1,200 claim, I can say, all right, can you suck the water up yourself? Is this carpet in your closet really that valuable to you? Can you pull it up and throw it away and put new carpet down? I mean, and I tried to say, let's work through this. Is something you really want to file? Then usually I don't hear back from them because they did take care of it themselves and said, Eric, thank you for that suggestion. That's going to save us, because 30% for 3 years generally costs more than that claim. If you don't get non-renewed, then you're good. If you do get non-renewed, suddenly you are blackballed in the market, and a lot of carriers are not taking people with prior claims. So, home claims, make sure that they are good and they're going to sting. That's usually my thing. If it's going to sting, file the claim. If it's not, just see what you can do to take care of it yourself. On the auto side is a little bit different. Everyone goes, hey, I have full coverage. Most people don't know what that means. Comprehensive and collision. Comprehensive is anything but collision. What the heck's that mean? Collision, you collide into something, something collides into you. The exception is a moving object. You're driving to the mountains, go to your ski thing, and a deer out of the blue, you hit the deer. That's a moving object. You couldn't avoid it. That's not going to be a chargeable collision. Generally, it falls under comprehensive. The dog, etc. Anything that's moving, a rolling rock, grows no moss. What? Rolling stone. But anyhow, so everything else is comprehensive, because comprehensive means anything and everything. So comprehensive is theft, vandalism, fire, tree falls down, hits your car, etc., etc. Those are all comprehensive. Okay. So comprehensive claims, doesn't matter what happens, to what extent, how much the money is. It is not chargeable at all to you. Okay. So that's the thing. Collision. You hit something, those pesky yellow poles that are just below your fender, And if you don't have a sweet 360-degree camera in your car that most people don't have, and you hit them, that will be chargeable. So depending on your deductible, that's what I tell people, how much is it going to cost you? And what's your deductible? And it's, oh, $1,000 deductible, that's a $1,200 claim. You don't want to file that claim. DMV says you have to file anything over $1,000 with the DMV, SR1, and most of us are 100% honest with our taxes, right? So you be as honest with the DMV about those $1,000 plus claims. But you don't have to file. I mean, you do legally. It's the law. But you know, there's some grace there depending on your favorite body mechanic who will generally make sure that you're good. But just FYI, just when you're filing claims, think about how's this going to impact me. Because if you do hit that pesky yellow pole, it's $1,001, and then you get that nice little red light camera, he goes, oh, those jerks in Santa Ana, I'm just going to pay for that. I'm going to traffic school. And little do you realize, one accident at fault is a point. Guess what? When that ticket comes around, that second point, and your insurance rates go up by $600 a year, and you're going, what? Whoa, these jerks raised my rates. Well, you lost your good driving discount because you have 2 points on your record. Oh, wonderful. Now you are in a bind because then you just got non-renewed by your carrier. So now you're going to the non-standard world. Most carriers won't cover you if you have 2 points. So, big picture. You got to have big picture when you're talking about claim stuff. All right, so moving on to business stuff. So I'm dealing with this a lot lately, especially in the workers' compensation world, is, you know, someone gets a little cut in their finger, and they say, oh, just go to urgent care, file the claim. Oh, I think I sprained my ankle, just go urgent care. Oh, my back hurts, just go to urgent care. What happens is there's a frequency and severity in the world of workers' compensation. Frequency, it's all those little $1,200 claims that add up, and they just add up and they stack up. And they may not add up to a lot, especially for a business that, say, may have a 5-figure plus premium on workers' compensation. But what happens is the carrier says, there's a problem in this business. They're not taking care of things. They're not giving oversight. They're not offering adequate safety training or management or supervision, etc. That will ding a business and cause them to be non-renewed. No, I have 2.5 minutes. That would cause them to be non-renewed. And what happens is if you do have a high enough workers' compensation premium, you get on what's called the experience modification. I know I'm getting technical for some of you going, whoa. But anyhow, that's a factor. That's a factor. It's either a discount or it's a multiplier up. It's up or down. All right? So frequency, you get a 1.2% experience mod, means you're paying 120% of the normal premium. So, but you want to, there's a way you can pay for those smaller claims with the urgent care people. There's a way you can pay those. They are still on your record, but they're paid for, and then the insurance companies look on you favorably. And if you're on the little X mod zone, you know if you are or not, then that's something to be aware of. And the severity is really just the shock losses. The shock loss is somebody falls from that ladder because they're getting that box up the shelf, and now they have a broken leg. It's surgery, it's pins, they're limping for the rest of their life. You got problems on your hands. So, but most importantly, when it comes to claims like that in the work comp land, make sure you're doing exit interviews when employees leave so that they aren't trying to file something frivolous. And also, make sure you have cameras in your business. If you're a high manufacturing kind of business where a lot of people can get injured, a lot of cameras can help you in a bad claim. Like Monday morning, really blew my knee out playing soccer, but I'm going to say I slipped and fell on this floor. So that's a scoop on that. And I've got basically a minute, so I'm going to see if there are any questions anybody has. Stunned into silence. Yes, sir, Mr.
I believe it was when you were talking about the homeowner's policy,
yes,
claim, and then for the next 3 years it's 30%. Is that 10% per year equals 30? Is it 30% each year?
30% each year.
90% of their loss.
No. 30% of your premium.
I got you.
So it's a surcharge.
Gotcha.
It's a surcharge. And companies are tightening that up. Some companies are saying no losses at all. My former farmer's place, they used to take someone 4 claims. Now they narrowed it down to 2 claims. So anyway, it's an interesting insurance world out there, and it's getting interesting for me because I'm having to rewrite a lot of people because rates are They're up, they're down, they're just all over the place. So when you see your own renewals, you'll see what I'm talking about. Yes, sir.
Eric, because of that issue with claims and you don't want to file, if there's things you can insure elsewhere and take off your homeowner's policy, would that be better?
I'm sorry.
No.
What?
Take, for example, not insure your jewelry with your homeowner's policy. Insure it separately. That's better. Or any other property, your value, artwork.
Yeah, you can do that, and that's, yeah, you can do that. There are floaters out there that are independent of your homeowner's floaters, yes. So,
And you can buy those separately too.
yeah, they're a little more expensive because it's outside the package, but yes. But generally, you got to have a certain dollar amount too.
Yeah.
So they don't take your $8,000 wedding ring. It's usually, they want the six-figure ring or $50,000 ring, you know. So I'm done. I'm out of time, but thank you all.
I know.